Welcome back to Navigating Retirement. I'm your host, Rick Durkee. You know, it's never too late to talk about being more mindful about our finances. It's always wise to save more money and spend less. These are important goals for any prudent saver or investor. They're essential for anyone nearing retirement. Many Americans are now living on tighter budgets due to inflation, and many find themselves more intentional with their money. We can all use a little help from our big financial decisions that we got coming up, whether budgeting or being smarter with our money. We're all better off making the most of every dollar that we have. Today, we'll discuss making the most of your tax return, making retirement more comfortable, and getting more done with less money. Stay tuned. As always, lots of valuable information coming your way on Navigating Retirement.
Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
This retirement planning video is meant to be shared with anyone who may find it helpful. If you think that your retirement-minded friends or family might be interested in watching this video, feel free to share it with them. There are also several links below in the show notes section with valuable information you can use in your retirement planning journey. Let's chart a path to navigate your journey into and throughout retirement. Saving more money with less. Well, what can I do to increase my savings for retirement? Could I save a little bit more tax efficiently? Could I do a little tax forward planning? What kind of forward planning could be done before now and year end? Could we make some IRA contributions? Do we have a employer sponsored plan that might have some availability for us to put some more money into? Could we maybe pay some taxes now on some IRA dollars that we have and convert those or transfer those into a Roth account so that it would grow income tax free going forward? Sometimes we can do stock redemptions. We can look at gainers and we can look at our loser stocks. We can sell the losers to pay the taxes for the taxes that we'll pay in capital gains tax on the winners. Rebalance our accounts. Look at what the next year looks like as far as risk goes with our stock portfolios. Real estate sales, capital gains avoidance, opportunity zone investing. All of you that have sold that property now, that investment property that might have had a high gain, let's look at 1031 exchanges. Many different opportunities that we can use to get our money to generate additional capital. Now, that is another question that we want to ask. How can we generate additional money streams in preparation for retirement? If Social Security may have some issues for me in the future, what can I do to create my own retirement income streams to supplement maybe those floundering government programs that they keep on voting on in Congress to extend the budget? How important is it to have a written income plan? Critical. Write it down and make it happen. If you state your goals and then you do what it takes to implement those goals, what action steps should you take next to make sure that you get the results that you're looking for? And then don't forget the most important part about planning and having a written income plan. Review it, evaluate the results, and look for opportunities for improvement. Saving on taxes. Can I use this traditional IRA that I have to be converted to the Roth IRA? What about a backdoor Roth? And might this opportunity be fading off into the sunset in 2022? We saw some provisions inside of the latest bills out of the House that looks like they may be taking away the backdoor Roth for high net worth individuals. Call us if you want to find some information on that. Hey, we're running short on time in 2021, and it's very likely that if Congress votes some new tax rules into play in 2022, that they may make them retroactive to January 1st of 2022. Now's the time to act. How do you avoid the estate tax? Well, gifting might be a good idea. What about family limited partnerships, irrevocable trusts, and trust planning? It's important to assemble your financial professionals, including that tax attorney or estate planning attorney that can help you do proper estate planning. We need to make sure that we're getting those ducks in a row, though, because again, opportunities may be limited going forward in 2022 and beyond. Here's one other question that we find gives a lot of consideration to tax forward planning. How do I need to give money to a charity? And how can I help my reduction of taxes? What about qualified charitable distributions? Is there time left in 2021 to take advantage of gifting? There certainly is, but you need to call us, 843-735-5065. Get on the slate for a quick 3-step review so that we can find out if we can help you. One other final point that I'd like to make here is lifetime income. When we're talking about lifetime income and generating that lifetime income, remember earlier I said we might have to find a replacement for Social Security. We might need to find those streams of income that can create guaranteed longevity payments and guarantee with annuity payments that can guarantee that we'll have that money as long as we live, and that they'll pay us out perhaps 4%, maybe more. Does that 4% withdrawal rate still work? You know, I saw an article recently on the 4% rule and that said that it was dead. What killed it? Well, probably people are living longer and market volatility. How can we take these risks off the table and make sure that we're proactively tax planning? Have you ever heard of a fixed index deferred annuity? Could it create guaranteed lifetime income that you couldn't outlive? Or do I need to try and invest the money to live off of a 4% withdrawal rate? Will I have enough 4% growth in the future? Will the market continue to grow as it has been? Or is it a possibility that it could go down? What's a realistic expectation for growth on money? Now, there's more effective alternatives to the 4% rule. Income allocation is one of them. We offer a book called Income Allocation that can help teach you about how to properly allocate the right amount of money so that you don't run out in your retirement years. One other option that you have is to create a guaranteed lifetime income stream from lifetime income benefit riders that are offered on deferred annuities. As a wrap up, the future of the economy is increasingly uncertain. Planning for retirement becomes even more critical when that reality sets in. And that could be not too far away. On this program, we shared a few ideas on how to help you save more, do more with your money, and most of all, plan for your retirement. Retirement is a time to enjoy the lifestyle you've worked hard to create. You can do that by having a written retirement income plan. The Coastal Financial Planning Group has professionals who can tailor any retirement plan to you, the individual. Unlike other firms, we'll give you the time to tell us what you want. We'll then use our expertise to help create a plan that will help you navigate your plan to get you there. Start planning for your future today with a complimentary 3-step review consultation. Call us at 843-735-5065. Retirement is a big step in life, one that shouldn't be taken lightly, and it's never too early, never too late to start planning for your retirement. Thank you, as always, for watching Navigating Retirement. We look forward to having you back on a future episode.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.